We're 3 hours into trading. It is Monday, August 23rd. Hello, traders. I did not do a video on Friday, but I did do one on Thursday. So let's take a look at that pick. That's how I like to start my videos. NVDA. That was my pick of the day. Video came out right about in here. You can see that the stock pulled back a little bit on Thursday, but big gap up on Friday, close on the high. Look at that stock today. Beautiful pick. This stock is up about $20 from the point that I put the video out. And you can see that was right around in here. You know, you had plenty of opportunities to get long. Excellent news. I love that D1 bull flag that I pointed out in that video. Really, really nice breakout. Once it was able to open above that downward sloping trend line, it was off to the races. Plus, we had a very strong market. Plus, we had big, big volume. Those are the keys. Technical breakouts, relative strength, heavy volume. When you have that combination, your probability of success is extremely high. That's what you need to look for. So I'm going to talk a little bit about the market right now. And you know that I've been talking a lot about context recently. So let's go back into the daily chart and look at the SPY and see what's going on. We'll also put up that 50-day SMA, and there you can see where it comes into play. We never got down to it, and I thought that we may have a little bounce and then another big leg lower, because very easy for everyone to expect this bounce in here and then to have the second shoe drop and to flush out everyone that bought early. We never even got down to the 50-day moving average and buyers had come in. Sorry about that. That is a alert that I had set. I'm watching SNOW. Here's what I like in this stock. I like the fact that it's been able to get back into the gap right in here. I like the fact that it's been able to make a series of higher lows, downward sloping trend line here. So that is a bull flag formation on a 5-minute chart. And I'm going to draw a couple of different alert lines. That's a horizontal line, and that is a downward sloping trend line. If either is breached, I want to know about it, because there will be a good chance for us to fill in this gap. Now, this is not a stock that I would necessarily want to swing trade. It needs to get above this downward sloping trend line here. So GTC, click on that bar there, click on that bar right there. Now I've got my GTC alert line working for me as well. There's your flagpole, not much of one because it's fairly flat. And now we've got our downward sloping trend line. It checks the 100, almost the 100-day moving average last Thursday, rallies back above the 50-day and the 200-day. This is a huge candle and it's very bullish. That is a bullish hammer. And if it can get through this downward sloping trend line, the stock will look good and it might actually be decent for a swing trade, but very, very choppy stock. So back to the market. So we get this pullback and we have buyers coming in before the 50-day moving average is even challenged, and a close near the high of the day. Then on Friday, we gap higher and we close on the high of the day. Today is a very, very difficult day for me personally to trade. You did have a small downward sloping trend line here that was violated to the upside on Friday, so that gives you a little bit of a bullish hammer here, or excuse me, bullish flag formation here, but not much of a flagpole because the market had just been barely even drifting higher. So this is not the type of bullish flag formation I would look for, but this is typical of the price action that we've seen. You get a couple of days of pullback and then boom, you make a new high, and then what? Then we go sideways. Zzz. Boring. No news to drive the market. Earnings season is over. We have very light economic news taking place right now. Everyone's trying to get their vacations in as kids go back to school. This is a really dull trading period each year. Towards the end of August, we start to see some seasonal weakness that also tends to flow into September. This is a time to be very cautious. And why don't I go back into actually, I'll just zoom out and we'll take a look at what happened last year as we start heading into the end of August. Everything's great, 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 great. We're just floating higher. We're floating higher. and then wham, you get this big drop and you get this nice sell-off, rally back up, never get back to the high, and then the second wave of selling. This takes us pretty much through October. So you can see this is the type of seasonal weakness that we may have ahead of us, and this is something that should keep you sidelined if you're a longer term swing trader right now. Once that selling passes, typically November and December are excellent months to trade the market. So I think you need to exercise a little bit of caution here. Even if you're a day trader, you should exercise some caution because every time that the market makes a new high, you can see that there's some weakness afterwards. In particular, these gaps higher on a day like today, when you get this gap up here, you have to wait to see if the gap is going to hold because you do not want to be buying near an all-time high and then have the market reverse immediately and have the rug pulled out from under you. So while you're waiting, all of a sudden the market starts to lift off and you get this little bit of a grind higher. I am 100% perfectly fine missing this move because what I don't want is to be loaded up with bullish positions and then to have a gap reversal. And we've seen plenty of those this year. Those are devastating because if the market closes on the low of the day, there's probably going to be follow through the next day, and then you're going to have some very tough decisions to make. So I waited this out, and then we just, on these tiny little candles, kept drifting higher. Now we have a bullish divergence forming. What do I mean? You've got a bearish cross right here, and you can see how the 10P indicator has been able to come all the way down. It will continue to drift lower with the market compressing on the high of the day. This is a sign that there is a very strong trend today. So you want to favor the long side. You want to be long this market. Any little dip will be an opportunity to buy today. And we are at a new all-time high for the market. We did have a bullish cross right in here early today. Would have been a nice entry point. I chose to stay sidelined and to just wait for this move to unfold. So again, if you look at the different types of openings that you can have, this is the worst opening formation for day traders. You get the gap higher and continuation, a gap and go formation near a relative high or an all-time high in this case. Why is that so bad? Well, because all stocks are going to be up, 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 up. You don't know if that stock is up because it has a lot of buying pressure or if it's simply following the market early in the day. Now, I'm going to go back and show you a couple of days that we had last week that set up beautifully. And so in this type of environment, if by chance you are trading from the long side and you've got a good feel that the market is going to go higher, then you need to cut your trade size back, cut your trade count back because this is a risky type of market setup. Where you can get more aggressive with your long positions in this kind of market is on a gap down. Gap downs are my favorite type of trading formation. You get this big gap down, had heavy selling pressure the day before, big gap down, and then you make a higher low, double bottom, and you start to break this downward sloping trend line. This is excellent. Why is this so preferable? Because when the market is down, 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 you're able to evaluate the stocks that have relative strength. When the market is down and the stock is inching its way higher, then you know that you've got the real deal. I'm sorry about that. We're going to be looking at snow again to see what it's doing. So there you've got your bullish flag formation. Stock is looking like it wants to continue to move higher a little bit right there. And looks like it might be a pretty good entry point for a long position. So that's one that you'll want to keep an eye on today. But this I would consider a day trade and not a swing trade until it can get through that D1 resistance line that I drew right there. So I do like SNOW here. I love this bar right here. I think we're going to see some follow through buying. So back to the market and the types of setups we like. This big sell off here, I'm able to find stocks that have relative strength so that when we finally do start to have a double bottom higher low and a breakdown through this, downward sloping trend line and a bullish 1OP cross, I know that I can take advantage of this move because it gets me on board with the longer term market trend, which is up. And so that's one of my favorite formations. Another good formation is actually a gap higher and then a dip on the open that tests that gap higher. So instead of a gap and go formation today, I would have been looking for a situation where the market gaps up, pulls back, starts to fill in some of that gap, gets all the way back here, and then starts to rally. That dip right there also gives me the chance to find stocks with relative strength, and it allows me an opportunity to get in nice and cheap so that I can start to follow the market higher and that stock continuing to move. We want stocks with heavy volume. So I'm going to go into my heavy buying list, and this is your pick of the day. Google, love it. You can see downward sloping trend line, breach to the upside. Stock closes on its high of the day Friday, and look at it today through that horizontal resistance level. And really nice tight price pattern, upward sloping. Google looks fantastic. Let's go into the 5-minute chart. You can see very, very heavy volume. But I would want to wait for a pullback. I want to see some market selling today. I've got to see a dip. I want to see how far Google will retrace on a market dip. And then I want to see it with relative strength. And then I might do something like a call debit spread, or I might sell an out of the money bullish put spread. I want to distance myself from the action when I am selling an out of the money bullish put spread. So I would lean on that upward sloping trend line. I would lean on that breakout right there. And I would be wanting to sell a bullish put spread below the opening price today on the notion that it is going to hold this week and that the market is simply going to float higher on very light volume. That's how I would play it. Don't trade because you're bored. This is a low probability market environment. We're in a news vacuum. We're in the dog days of summer. Gains that come on light volume where we just float higher are easily stripped away just like that. So if you're loaded up right in here and you get one of these drops, they're devastating because now you're having to manage your positions, adjust your positions, and you don't know when we might get that drop that has a second leg to it. So trade cautiously. Know that this is a seasonally weak period. Google is a stock that you want to watch. I believe that the S&P 500 is going to get into more of this type of price pattern from this point on, probably through Labor Day. We've had the sell-off, we've had the quick rebound. Now we're going to see this type of price action. So that's what's in store for us. Hope this information has helped you. Please post your comments. Please subscribe to the YouTube channel. I have been doing these videos intermittently. I don't do them every day because the market, quite honestly, has been pretty boring recently. Thanks so much. Trade well. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.